Hi everyone, welcome back to my channel. So today's video is all about how to identify and capitalize on a recurring seasonal pattern on the large cap stock Visa, also while positioning yourself strategically to swing trade this with intention, not necessarily with impulse. So this video is just going to be a little quick recap on how I trade this every single year and how I've been successful for the last 5 years. So let's go ahead and dive right into it. So the very first thing I do want to mention in this video is that this pattern plays out, again, as I mentioned, almost every single year for the past 5 years. And what typically happens is that Visa stock will dip in the month of October, and then it climbs throughout Q4. And by January, I'm securing profits. So this is a consistent swing trade, and is basically a system backed by price behavior. Now, I can say that it has technical respect since the key levels do hold with this stock. And then to go along with that, and one great thing about this swing trade, I have made a video discussing the fact that Visa has lower volatility compared to high beta stocks. So this also makes it perfect for swing setups. So I'll leave a link for that video down below. But it is good to note that institutional money rotates into names like Visa, especially during the end of the year for stability. So let me go ahead and show y'all what this looks like on the charts. We're going to go ahead and start with the year of 2020, and we'll take a look at October here. We can see that the stock was trading in the range of about $190 to $195. And then if we fast forward to December of that year, we can see that the stock soared to about $212. So within the price range of about $212 to $215 to end the year. And then if we take a look here at 2021, we can see in about October of this year, the stock was trading in the range of about $212. And then if we go ahead and take a look at December of 2021, we can see that the stock rose to about $219 towards the end of the year. And then moving on to 2022, we can see that it actually reached the all-time low for the past 5 years, and it was at $174.60 in October. And then moving forward to December of 2022, we can see that the stock actually rose up to be about $218 to about $220 in that range there. So at this point, I think y'all pretty much catch the drift. But we're going to go ahead and take a look at 2023. We can see that the stock was in the range of about $227 to $230. And then once we fast forward to December of 23, we can see that the stock rose up to about $259 to $260 for the price range. And then following suit with the same pattern, we're going to take a look at last year from 2024, taking a look at October. We can see that the stock was in the range of about $272 to $275. And then, of course, by the end of the year last year, we can see that the stock rose up to be about $317 to about $320 at the highest. So yeah, y'all, this is just showing y'all confirmation that October is typically the month that the stock dips. Now, obviously, this is the start of Q4, so there's several reasons for the sell-off. One is going to be broader market pullbacks, and then in addition to that, it's also going to be the end of Q3's residual effects. So by mid to the end of December, Visa has almost always regained momentum pretty strongly. Now, as mentioned, January is typically going to be the month that I choose to take profits simply because the holidays have passed and it's the best time for me to go ahead and make sure I'm hopping out of the trade while still taking considerable profits. Now, to emphasize that this is a repeating structure, of course, you want to make sure that when you are doing your own research and you're looking for stocks like this, you're looking for the seasonality. And I have made a video discussing this same exact strategy on Shopify, so I'll leave a link for that down below as well. But it pretty much follows the same rules as this. We, of course, know that they're within the same industry, so it makes perfect sense that the stocks flow together. So that's always something to keep in mind. Now, for anyone wondering about an entry strategy, you can be sure to use a time-based trigger, so you can scan for entries each October to make sure that it's going to make sense for your trading plan, and then you can have your setups based on specific triggers. So you can wait for the dip, and it can be like a confirmation candle or a setup candles, and then accompany that with making sure that there's a support bounce. Now, I will say that there's no guarantee that this will happen every single year, y'all, but it has repeatedly happened for the past 5 years, so I'm just going off historical analysis. So with that in mind, make sure you have tight risk management. So you want to size based on the average drawdown and of course those support zones as mentioned. Now, another key aspect of this to pay attention to is that January is usually a profit-taking month for institutions as well. So you're not necessarily chasing heights with this and you're not overstaying. And then another great thing about it is that it's repeatable, so it's a stress-free strategy. Now, my personal favorite part about taking these types of swings is that this strategy works because you're not micromanaging the chart daily. You're trading cyclicality, so it makes for ease of use. So with these types of trades, I probably check on them maybe like once every few weeks, if that, because it doesn't require a whole lot of attention. The trade just plays in your favor based on time. Now we can see here in 2025 for this year so far, we see that the actual high of the stock is at 375.51. Clearly there's been a decline since then because we can see this candle here is an extremely bearish candle. So it does appear that Visa may very likely enter into a full pullback very soon. Now you also want to keep in mind to review the earnings dates and any type of macro catalyst before entry. That way you're fully prepared to make a move based upon the numbers. And I also want to recommend that if you are a new trader and you're contemplating taking this type of trade, never risk large capital on one swing. Visa is a slower mover as mentioned, so it's not a lotto play. So just be sure that you know exactly what you're doing when you enter options trades on this. Now, one other thing to mention in this video is that most traders may be too locked in on hot tickers or breaking news, so some may not be tracking patterns that show up every year in solid names, hence like Visa. But to be honest, y'all, that's where consistent money lives. Now, the reason I swing trade Visa every Q4 isn't hype. It's just simply because history favors patience and structure. So if you're tired of chasing every break, find a name that rewards discipline, because you'll end up saving yourself a lot of time and frustration. Now, in summation, an aspect of this that I do not want to fail to mention is that one area that's typically underutilized by many traders, in my opinion, but heavily monitored by larger investors, is volatility skew. Most traders are commonly familiar with implied volatility in isolation, but the skew reveals the market's directional bias, and it's a reference that can position you steps ahead in a swing trade. So volatility skew, for anyone unaware, it just refers to the difference in implied volatility between out-the-money calls and puts. For example, with Visa, a steep put skew, where the out-of-the-money puts are priced with significantly higher implied volatility than calls, this signals hedging activity or like downside risk pricing. Now that doesn't just tell you where fear is, it tells you where premium is truly overpriced for real. Now here's where the edge comes in. When swing trading around earnings, or even if it's a macro event, or in this case like seasonality with this Q4 recurrence, understanding the skew lets you structure trades in like an asymmetric way. You're not just trading price action at that point, you're trading mispriced volatility for the most part. And this is where high probability trades live. So a key takeaway is that if the skew is elevated to, let's say, the downside, but price is consolidating at a known seasonal support zone, you can selectively sell premiums using vertical spreads that capitalize on theta decay and a mean reversion in volatility. Now, most traders look at patterns singularly, and a few ask, what's the market pricing in? Volatility skew pretty much answers that question. Since it's not centrally focused on projecting direction, it's more about positioning when the market is overcompensating for one side of the risk. So hopefully that makes sense. So when I swing trade stocks like Visa in Q4, I'm always checking the skew, the open interest layout, and where premium is heightened, because that's what it really means to trade with intention. And yeah, I just wanted to briefly mention that. So yeah, y'all, this was just a quick little recap. I hope this information was beneficial for y'all. But all in all, that'll pretty much do it for this video. If you found any of this information to be helpful, feel free to leave me a comment down below. As always, I thank y'all so much for watching. And of course, I'll see y'all in my next one.